and welcome to another exciting interview by Financial Insight. My name is Mwelwa Kenneth and I'll be sitting down with Finwise Analytica CEO Chiti Kalinda. So stay tuned for insights as he will be presenting their latest report right here on the Financial Insight Show. Welcome back, everyone. And as I'd mentioned, I'm sitting down with Chiti from Finwise. Chiti, how are you doing?
Very well, thanks, Mwelwa. It's a pleasure to be here.
It's always an honor to host you on our show.
No, thanks so much for having me, and I'm excited to present our latest report.
Absolutely. But before we get into that, just tell us how have you been and how's the team at Finwise Analytica?
No, we've been quite busy. We've been well, but quite busy, helping out institutions, get meaning out of their data, doing consultancy works, market analysis, due diligence. So it's been quite a busy time for us, but also quite exciting because we got quite a number of things coming up.
Absolutely,
Exactly.
absolutely. And I think, from our last interview, Chiti did signal to the market that they will be releasing a new report. And
Precisely.
you guys are calling it, the Deposit-Taking Microfinance Institutions report, or MFI report. But before we get into it, what exactly are these deposit-taking MFIs? And maybe they're commonly known as something else. So please educate our viewers regarding what these guys are.
So thanks, Mwelwa. So what we have under the MFI, or microfinance institution, if you look at the definition of microfinance institution, it's an institution that gives out microcredit, right? And then microcredit is defined as any facility that is less than 5% of the primary capital of that institution. So in a layman's language, you are talking of small financing, microfinancing, that is going out to consumers, to enterprises. And if you look at the structure, and I'm sure I will delve into that in detail, if you look at the structure of the industry, so microfinance institutions would fall under your non-bank financial institutions, right? So you've got banking institutions, and then you've got non-bank financial institutions, and under non-bank financial institutions, you have your pension funds, you have your insurance companies, then you have your microfinance institutions. And it's very interesting because under this space, you have different categories of microfinance institutions as well. So you have institutions that take in deposits from the public, and that's what this report is focused on. Then you have microfinance institutions that use their private capital. So this would be shareholder capital, or external borrowings, or local borrowings, but they don't take deposits from the public. And then you have some loose definition of microfinance institutions which fall under the money lender's license. But they're also providing microcredit. So loosely, we can also call them microfinance institutions.
Right. Now, for Finwise, you've been associated with what we like to call Financial Insight, the Royal Rumble for banking.
Correct.
So the bankers report, and I think our last conversation was on one of the quarters, review. What motivated Finwise to delve into the deposit-taking MFIs?
Thanks, Mal. So our motivation stems from our commitment to transparency and to data-driven decision-making, not just for the financial sector, but across the various sectors. So we noticed a gap in terms of information with regards microfinance institutions. We've done 2 editions of the banking industry report, and it's received quite some overwhelming response. So there's a lot of visibility on the banks, but there's very little visibility on the microfinance institutions. And you'll be amazed to see the level of deposits and even loans that these microfinance institutions write. In terms of profitability as well, you'll be amazed to note that some of these microfinance institutions are even more profitable than some banks.
Oh, really?
So we wanted to bring visibility to the microfinance industry or sector, and it's very, very competitive sector. A very competitive sector, very interesting. It's got its own dynamics, its own funding dynamics, efficiency dynamics. So we wanted to bring that visibility, and we started with the 2024 report, but you'll be seeing them every quarter,
Right.
just like we do for the banking report. And also the other motivation was, if we look at Bank of Zambia is doing a fantastic job in terms of the information, but the information is aggregated. So they'll give us information about the entire sector without going into the specifics. So we wanted to fill that gap and say, look, just as much as we have this aggregate data at over industry level, can we then add in the specifics, which institution is doing what do the numbers look like versus the overall industry.
Right, and then obviously, like you mentioned, that this information is already publicly available.
Correct.
Yes, but it's aggregated.
Correct.
Right. Now, the report provides a comprehensive overview of the overall sector, and it includes things like revenue, profitability, and cost structures. What are some of the key findings and trends that emerge from the analysis, and what do they imply regarding, the sector's future?
Perfect. So before we even go into the granular details of the report, one of the things that we're seeing in this space is we are seeing the microfinance space increase its share of wallet in terms of private credit. So if we go back to 2021, banks commanded around 85%, commercial banks, around 85% of the entire private credit. Microfinance institutions comprised somewhere around 9%. Now, when we talk about microfinance institutions, like I said, so we've got players that take in deposits, we've got players that don't take in deposits, then we've got players that are not regulated by Bank of Zambia. These are called money lenders, but some of them actually have very huge or relatively huge balances in terms of the loan book, right? So, and that's one sector, for example, that's missing from the visibility because that information does not go to Bank of Zambia like the others. But what we are seeing is for these institutions that are regulated by the central bank, we are seeing them move from 9% share of wallet in terms of private credit to around 29% within 3 years.
That's quite substantial.
Quite substantial. And you then wonder and say, what's driving this, right? And if you just look at the gross loan book for these microfinance institutions, they're moving from somewhere around 6 billion in 2021 to somewhere around 14 billion in 2024.
Over double.
That's over double, right? Now, when you go down a layer and say, what's driving this growth? You then want to find out what type of products or segments are driving this. And you'll be amazed to note that in 2021, for example, 82% of all the loans disbursements were under consumer lending. That number has gone up from 82% to 89% in 2024. So every 100 kwacha that the MFIs disperse, 89 kwacha goes to consumers. That's a simple implication on average.
Exactly, yes.
Yes. So we are seeing those insights. And what that tells us then is what's driving this consumer appetite. And then you come to think of things like government's recruitment drive, things like inflationary pressures and things like that that are then driving that. But if we now go into details and look at the deposit-taking microfinance institutions. And if we try to borrow some terms on the Royal Rumble, the Champions League from the banking side, you will find that the structure of this space has 7 microfinance institutions, DTI, deposit-taking institutions, and one microfinance institution commands 63% of share in terms of profit after tax, and that is 𝗡𝗡.
Wow.
The next microfinance institution is Microfinance Zambia, that commands around 23%. So just the two of them command over 80% of the share as far as deposit-taking microfinance institutions are concerned.
I recall we had a similar comparison with the Royal Rumble,
Exactly.
with the Champions League, you had about 3-4 players.
Correct. So when you come to the microfinance institution space, the dynamics are a bit different. And then when you want to now unpack and say what's driving this kind of view we're seeing, and you might think it's things like deposits, but you find that some of the leading microfinance institutions have a very low base of deposits compared to the other funding sources. So for example, as at 2024, 𝗡𝗡 had around $3 billion in dollars and only 400 million in deposits. It wasn't even the leader in deposits. You had Microfinance Zambia, who was leading in deposits, just above 600 million. So when we look at the microfinance space, what we are seeing are slightly different dynamics and slightly different key success factors for this industry. And the funding structure is very important for this space because the margins, the net interest margin for the industry is around 20%, which is quite healthy. If you look at your return on equity, it's around 22%, relatively higher than the banking side. Return on assets is hovering around 7%, somewhere there. So what this tells us is that if we just look at the deposit-taking institutions, it also reveals things around efficiency. Cost-to-income ratio for the industry is about 56%. So for every 100 kwacha that the industry makes in revenue, 56 kwacha is spent on costs, which is relatively high. So what this then tells us is that we need to bring in elements of digitization, bring in elements of efficiency. But I think in terms of the future of the industry, it's quite resilient. And what we're going, for example, what you're going to see in the subsequent reports is just to add context to say, this microfinance institution, for example, is number 1, but we're also going to add a layer that says how long have they been in the market. This microfinance institution is number 4, how long have they been in the market? So that readers can kind of contextualize the whole the whole report.
Right. Now, how do you envision this report influencing decision-making among stakeholders such as boards, investors, regulators, and policymakers? And what specific actions or changes might they consider based on the report's findings?
Thanks, Mwelwa. So, some of the key aspects that we see in the report, and this report, one of the reasons we decided to go ahead and do a microfinance institution report is to help decision makers have some form of benchmarks, right? So we're not just providing ratios or figures or analytics for specific MFIs. We are providing this for the industry as a whole. So what that does is that it helps decision makers have some form of benchmarks. And these benchmarks, you'll be amazed that some of the decision makers or institutions that are using this are not even microfinance institutions. So you'll find, for example, a bank using some of these metrics. How come this MFI is doing better than us? What can we learn from their model or from their efficiencies and things like that? So it's not only for decision makers within that industry, but it goes beyond that industry. So it talks of things like efficiency, operational self-sufficiency, ratios that we don't usually see in the banking space or Sierra. So we've brought in different aspects that are unique to this industry. And for decision makers, aside just from the benchmarks, I think it then presents an opportunity to go into a deep dive session. Why is this institution doing better than us? If we've been in the game for longer, why are they beating us to the game? So it then creates this age to deep dive and say, how can we learn from our peers and what can we do better? That's from the peers. And then you also have regulators as well. I know Bank of Zambia does this or receive this report, but also give them a sense of just looking at the data through visuals, and it gives a different understanding when you're just crunching the numbers and when you see the visuals. You see by what extent this institution is leading the other institution, and also for investors, investors who want to come into this space, it gives them a sense of what really is happening in this sector, and they're able to compare with other jurisdictions. Because if you ask me a return of an equity of 22%, that's a decent return, assuming our foreign exchange the exchange rate is stable and all those things. It's a decent return. Right. So it gives benchmarks to a different, not just executives of MFIs, but across even banks, the board as well, just to see how their institution is doing versus peers.
Right. Now, like you've rightly put it, obviously the report does spark, conversations, as well as, issues of addressing things like sustainability, cost discipline, and profitability around the space. One might ask that, does this also now just showcase what role, or rather, does this help like amplify the role that MFIs are playing in advancing financial inclusion, and how they can balance sustainability with their social mission?
Exactly. Some of the 𝗙𝗶 data you see is that between Lusaka and Copperbelt province, they command over 60% of the entire credit in the market. So for every 100 kwacha loan that is given out, 60 kwacha will either be for a customer in Lusaka or a customer on the Copperbelt. What that then does is that it gives actually an opportunity for the MFIs to save the other markets which are underserved. And also, one of the key aspects that we are seeing is that if you look at the split between rural and urban, you still see that the urban takes a huge chunk of that. But when you look at, for example, things like diversity, women versus male, you find that the disparity is not that much. So you find like private credit male is about 53%, and then you've got 47% to women, which is quite good. But I think where we now need to go is how do we take this credit to the areas that might need this credit? How do we take this credit to the rural areas? How do we take this credit to the other provinces? And one might argue that economic activity is centered around here. But I think if you look at what's happening, for example, around CDF and all those things, Ministry of Agric, under Farmer Input Support Program. So you've got all these programs that are not just centered within the line of rail. And I think that gives an opportunity for the MFIs to then reach out and structure products that would benefit those communities. But aside from that, you also note that, and this is where the risk also comes in for the MFIs, traditional MFIs, is you've got a segment of digital lenders that is coming up very aggressively.
Okay.
And some of these digital lenders may not even be under the Bank of Zambia licensing.
Okay.
These might be under money lenders, but they're giving out micro credit.
Okay.
And this is a high turnover business. To meet your short-term needs, you need a 200 kwacha, you need a 300 kwacha, you need a 400 kwacha, and they're able to meet that gap. And they're able to meet it at lightning speed. But how are they doing it? Digital, mostly. And this is where we're seeing that for microfinance institutions to be able to balance, for example, things like efficiency, they need to really go into how can we deliver the same product more efficiently. And more efficiently would mean at a lesser cost and at better speed. And what that means is then do we need all these overheads and then things like that.
Right.
Exactly.
Now, Chiti, obviously, you guys have done the bankers' reports, now the MFIs. What's next for Finwise in terms of expanding, your analysis across the financial ecosystem, and how do you plan to continue supporting the advancement of financial inclusion and sector reliance in Zambia?
Thanks, Mwelwa. So after we did the first two reports for the banking, the 2024 full year, we did the Q1 2025 report. We received quite some overwhelming response and also some feedback. So some of the things that you'll be seeing in the next 3 weeks, we're releasing the Q2.
And I'm looking forward to having that conversation because this is at the halfway mark
Exactly,
now.
exactly. So we're going to be releasing the Q2 2025 report. And in there, based on the feedback that we've received, we will be adding some form of narratives. We'll also add some definitions of what you see in there, because sometimes you put cost to income ratio, but someone doesn't understand what that is. So we'll include things like that.
Okay.
Then we are also expanding our scope, not just in terms of publicly available information. We're also expanding into surveys, just getting the data as it is on the ground, just the feel of the customers. The report might be saying something else, the sector is doing very well, but you find that the recipients of the service are saying something else.
Absolutely.
Exactly.
Absolutely.
So we'll be expanding into that space just to get a sense of what the customers of these products are saying, to get a sense of the regulator, to get a sense of the investors. So you'll be seeing more in-depth reports, market analysis reports, market intelligence reports around banking and MFI. Then we'll also just be showcasing our data analytics. Like I mentioned last time, we're able to get these reports in 2 minutes. So we want to also showcase that to the customers or to both in the MFI space and any other sectors, that data is the way to go. You can't run a business without data. But even without data, you need to be able to extract insights out of that. So we'll continue giving the public insights across different sectors.
Right. No, thank you so much for sharing those thoughts. And maybe just on a final note, you guys have taken on the arduous task of crunching the numbers, etc. And one always wonders, like, look, how are you sure about the consistency of your team being able to to continue to deliver such high quality work?
Exactly, and I think to answer that question, Mwelwa, one of the key aspects of what we do is how do we make the next report better than the last report. Right. So if you look at our 2024 report and if you look at our Q1
correct,
2025
it's a marked
report,
difference. It's a marked difference. Day and night even.
Exactly. So you see different insights, new things added to that, and that's what excites us. That's what keeps us up. So you'll be seeing this every quarter. We have a team dedicated to this that work on this. You'll be amazed that just the design of that report takes maybe, and that's the part that takes the longest time.
Right.
So for us, it's not just the report, it's also things like the design, the aesthetics, and things like, so you see not just that report, but you see many more reports consistently every quarter for those that publish their financials, but you even be seeing more insights maybe in the telecoms and all those things. So we just bring in a lot of insights because data is everywhere.
Correct.
So we want to bring that data into one central place. There's data that is related, correlated, so we'll bring into one place and you'll be seeing that consistently.
Absolutely. No, Chiti Kalinda, thank you so much for speaking to us.
Thank you so much, Mwelwa. It's a pleasure being here.
So there you have it. I've been sitting down with Chiti Kalinda of Finwise. So stay tuned for more insights and look out for the next upcoming report from Finwise Analytica. I've been your host, Mwelwa Kenneth Chibesakunda. Get to know.